U.S. imposes 50% tariffs on Canadian goods. North American trade dispute deepens. Washington. In a sudden escalation of trade policy, the U.S. administration has announced a massive 50% tariff on a broad range of Canadian imports, triggering immediate economic shockwaves across North American markets and raising fears of widespread consumer price spikes. The sweeping tariffs target critical Canadian exports, including softwood lumber, steel, aluminum, automotive components, and key agricultural products. White House officials justified the aggressive action by citing long-standing trade imbalances, market access friction, and allegations of unfair subsidies provided by Canadian provincial authorities to domestic producers. For years, American workers and manufacturers have operated on an uneven playing field, stated White House economic advisors during a press briefing. These targeted measures are designed to protect domestic industries, incentivize American manufacturing, and push for fairer trade practices. Immediate economic reactions and consumer impact. The announcement caused immediate volatility across global financial markets. U.S. stock indices reacted sharply, with construction, automotive, and retail manufacturing sectors leading losses over supply chain concerns. Economists warn that a 50% tax on primary Canadian materials, particularly lumber and steel, could directly impact everyday prices for American families. Housing and construction. Canadian softwood supplies a significant portion of residential home building in the U.S. Industry analysts project that rising lumber costs could increase the average construction cost of a single-family home by thousands of dollars. Automotive industry. The U.S. and Canadian auto industries are deeply integrated, with vehicle components frequently crossing the border multiple times during manufacturing. High tariffs risk delaying production lines and raising sticker prices on new vehicles. Consumer goods. Agricultural imports, including specific food and beverage products, could see noticeable price increases at grocery stores nationwide. Ottawa's response and retaliatory measures. In Ottawa, Canadian leaders convened emergency sessions to formulate a response. Canadian officials condemned the move, describing the 50% tariffs as unjustified, punitive, and damaging to both economies. Canadian trade ministers confirmed that retaliatory counter-tariffs are being finalized. Ottawa's response is expected to target high-value U.S. exports, including manufactured goods, heavy machinery, and agricultural products originating from key U.S. industrial states. What lies ahead? With bilateral trade between the U.S. and Canada totaling hundreds of billions of dollars annually, market analysts fear a prolonged economic impasse could slow growth and fuel persistent inflation across North America. While diplomatic channels remain open, business coalitions on both sides of the border are aggressively lobbying lawmakers to enter renegotiations before the full economic impact ripples through supply chains in the coming months.